Yeah, welcome. Recognize the name. It's good to see you back. Right, we've had a decent day today on the markets, and so I'm just going to go through by talking about what we've got going on today. It will give you an example of what I do in my day trading room and how we manage the markets. So the idea of today is just to give you a quick insight into a few hot tips and what to look out for, and then what you can expect if you want to come into our trading room. So, I mean, this NASDAQ has moved over 250 pips today, but how can you capture some or most of that? We're not obviously not looking to buy the absolute bottoms and sell the absolute tops. I mean, that's just nonsense. I'm sure you appreciate that. But all we're looking to do is to make our day's money. Before I forget, by all means, just type in any questions in the chat box, and I'll come to that as and when you punch any questions in there. All right. So, yeah. So, how can you manage today? What are the top tips when you come into the markets and you want to put your precious capital on the line? You need to be properly prepared. Hot tip number one. Well, software. This is Pro Real-Time Charts, which is free on. It's free on IG. This is a leveraged account. Yeah, I'll show you some live trades in a minute. I'll show you some trades that I've done and show you the profit levels. Okay, so if you are I'm not. Yeah, that's a good question. Is scalping working in today's market? I'm not. I do scalp, but less and less often. What I'm looking for, what I'm trying to achieve here, is I'm looking for an intraday move. Not looking to scalp 5, 10, 20 pips. I'm looking for an intraday move. So I'm looking for, in something like the NASDAQ or the S&Ps or Dow, I'm looking for a minimum of 100 pips. And on a good day, I can do anything from 300 to 500 pips a day. And I will show you some examples. London session, the room actually opens up for the US session only. So we open the room up. I've been opening the room up to trade oil at 9 AM New York time, 2 o'clock UK time. And then we look to see if there's a trade in the oil. And yeah, that's why I don't scalp. I don't often scalp. I'm looking for bigger intraday moves. And so what I'm looking for, so the kind of preparation I do for the prior to the open is, first of all, looking for the basic support and resistance. So here on this NASDAQ, on the 20th of July, this 12,330 area was resistance. We popped up here on the 20th, yeah, the same day. Sorry, it's a 10-minute chart, isn't it? Popped up here on the same day, so that resistance became support. So 2-3 hours into the close yesterday, you should have been looking to pick up 325, 330, and then you could have taken that back to resistance. So today, this took a good 60 minutes to set up. So you've got to be, if you're not careful, it's these kinds of opens you can get really chopped up on. So that's why you need to be properly prepared, and you also need to know how to manage your account. I get stop outs. I can go for anything between 4 or 5 plus days without stop out on a good run. Ordinarily, today I had one stop out in the early stages of the open, because you can see from this NASDAQ, we came down early on in the period. It looked as if this support was going to hold. So I was buying here, sat in it while it went up to resistance, and it pulled right underneath my support level. So I pushed the stop up. So although this trade didn't work, I was looking to see if we could break up here, pushed the stop up and got stopped out, and then went back in on this support. And we're still pushing higher as we speak. I don't actually trade off a 10-minute chart. I'm just trying to show you the principles. The main principle of I do trade on the lowest time frame I use is a 2-minute chart, but I use it in a certain way. I'm not sitting here looking for 2-minute buy signals and jumping in and out on 2-minute buy signals and sell signals. I look at it in a certain setup and then correlate that or line that up with the other time frames that I use. All right, my anchor chart is actually a 15-minute chart. So what I'm doing is I'm fine-tuning my entries in a 2-minute chart, and then looking at the overall range of the day and the scope and potential for the day using a 15-minute chart, and of course an hourly, a 2-hour, and daily, and so on. All right, so yeah, the NASDAQ did a little bit of a false move. Well, I did a move into the first 30, 45 minutes, and then pulled right back inside the first hour and then tripped up. Okay, I like chart patterns, so I'm interested in build up. So if I can see a trend line like this holding, and then if I can see it breaking out, then I'm going to hold it and hang on to it and have higher targets. All right, so the primary thing I'm looking for at the open is the first open range. So what we've got here, this is the first open range on the NASDAQ today. So you can see we stayed in the range all bar. There's only one bar on this 10-minute chart that closed outside the opening range. So that's why today was slightly more difficult and incurred a stop out for me. A stop out with profit, I should say. It wasn't a stop out with a loss, it was a stop out with profit. So once this market confirmed that the chances are this range would ultimately hold, then I started buying back in again. You can see at this point, if I point to one of the most crucial areas of this chart, is so we closed outside of the range and immediately closed in, and then the very next bar here went to the floor of the range. So that's why I was still bullish on this market, even though we'd had a dip, a good 150 pip dip from this recent high to that low. All right, so we basically had a three-wave correction, and then we got we're in the process of a 1, 2. We're still in wave 3 and potentially breaking new highs all the time here. So critical thing is, so in terms of what I'm doing in the trading room is I'm lining the markets up for support and resistance. Support and resistance is highly underrated. People spend so much time looking at indicators and Ikamu charts, or whatever they're called, MACD. And there's nothing wrong with these indicators, but most, if not all, lag. The only indicator that I like is volume. That's the only, volume is the source of the markets. If you haven't got volume, then obviously it stands to reason you probably haven't got a trade. So one of the reasons why volume can actually keep you safe during a trade as well, if you are going if you've got very thin volume and the volumes are and you're going up on lower volume. Now here we have a nice spike in volume here, but obviously the market didn't work. But when this market pulled back, you saw consistent bars here. Now I grant you they're ideally you need them higher, but at least you had consistent volume coming in on these charts. So every time this little market did dips, you saw an increase in the number of traders buying into these dips, and we're still seeing that even at these highs. So I think this price is supported, and as long as we can continue to see some volume coming in here, then I think this could continue higher. We're making higher highs. As long as if we can continue to break these highs, then I think we can continue potentially into the close. Okay, so I'm looking for several things. I'm looking for volume, support and resistance, and patterns. I'm not bothered about indicators. I'm not looking at a huge number of time frames. If you want to trade this and stay on the right side of the trade, whatever you do, whatever your strategy is, it's got to be simple and something that you can use every day. And you to do the same thing every day and expect the same results. All right, now if we step up a time frame, let's look at the hourly on this. So you can see how these lows. So we had on Monday on this hourly chart, we came into the markets and we had typically on a Monday the markets reset. So it came down to this key area 856, a little bit lower into the close and after the close, and then the very next day it starts to close higher, and it just closed higher all the time until we got to this level up here at 286, and that was into the close on Tuesday. Wednesday was very easy to trade. So this was the let me just double check what day this. Hang on, I'm just checking. Bear with me 1 second. Apologies, just got caught away there for a second. So you can see into the open on Tuesday, we closed higher at the open, just prior to the open, and then went into that resistance here. So you can see on the pullback, on the low into the open today, we came into this price level from Wednesday, and here we're still making higher closes on the hourly. Okay, so you can see by plotting the week ahead, you can guide yourself into these trades and actually plot the chart. That's the crucial thing. It's all about mapping these charts out. So if you're able to map, have a simple way of measuring these charts, then when you get these sell days, you can pick off the key support level and then trade them back up. Because if you're holding these support levels and closing out of these patterns, then this is where you want to be. So you can see pulled right back into the prior week support, does a run, pulls back, does a run, pulls back. So this is a very, very bullish chart. If we break this high in this hour, we could continue like this into the close for the US. So by having a simple system, you can really plot these charts and stay on the right side of the trade. I mean, obviously this has been a very bullish week, not quite finished yet. But look at how, if you plot this week, you plot prior weeks, you will note that we had a similar, you can get, this took a few days to set up, and we did breach lows here, but these are very, very powerful setups. Lovely drop up here on the Monday, sorry, the Tuesday. This on this particular week it dropped on the Tuesday, pull back into the Thursday and out on the Friday. No, sorry, that's the, I'm crossing my weeks over, hang on. There we go. So we finished the week still low, but basing. Started the next week a little bit too high, so it did the usual pull back into the Friday support, into the end of the week support. Then we go on a really nice run and recover all of that loss. So it's basically, if you're into wave patterns, I'm a huge fan of Elliott wave. You've got a 1, 2, 3 wave corrective pattern, and then you start the whole process again. All right, so simple plotting. I overlay my templates onto these charts, and it enables me to pick my spots and really organize myself so that I can manage my risk. So even if I'm on the wrong side of a trade, I either make a small loss or I give some profits back. And that's what happened today before I reloaded on the key area of support on this. Okay. So the main elements of day trading for me is not sitting there. I mean, these 1 minute charts. I've seen some quite experienced traders trade on 1 minute charts. I don't think you can trade on a 1 minute chart. Personally, I think there's just way too much noise on it. You'll be in and out all the time and potentially missing the key areas, structure of the chart, unless you're you know what to look for and you can see these patterns. Okay, but I mean, as soon as I overlay these patterns, you can see what they're doing. Okay, I mean, you can, there is a way of using a 1 minute chart, but I prefer not to. I just think you get, it's just, yeah, I think it's very distracting. Way too much noise in a 1 minute chart. 5 minute chart's all right if that's your thing, but this 10 minute chart, particularly with this range on, picks off this very, very well. Right, you can do this with oil. I shorted oil into the close today. There's a few other elements I've not shown you on some of these charts, but I'll save that for another day. So I shorted oil. Notice how we actually started today on oil in the Euro session with a move higher, but with a huge amount of, we already had a couple of moves to the downside. So you can see if you range this, you'll note a few things. You've got lower highs, lower lows, and then they finally just crack, they just give way. You get this huge downdraft, and it just kept going. And even now, this oil is really struggling up here. So if ever this area now 998.45, if we don't get back up there, back through that 98.45, if we come into there and test that and what I call fade it, that would be a great opportunity to get short. So I took 150 pips out of this morning, and I actually traded it to the upside as well. I actually took a little move out of here, but I took it off into this 97 and left it, and then concentrated on the S&Ps and the NASDAQ. All right, just bear with me 1 second. I meant to show the couple of charts I want to just show you. So I'm just going to turn off the share for a second while I go and get a couple of charts I want to show you. Show you that one. Right, these are very recent trades I'm going to show you. So selection. Right, let me put the share back on. Pull this over. So you can see here, this is before gold rolled over. I actually, I get it wrong. Every trader gets it wrong every now and again. But I took, by the time I did the screenshot, I was 430 up on this. So I was looking to see if this gold could hold these levels here. You can see my entry is down here at this 1735 support. I took it off soon after this because we were hitting resistance up here at 47 into the 48, 49.50 area. So, and then of course, when did I do this? I think this was a couple of days ago now. And of course, ultimately it broke down and we went to 1680. We came right down here in the end. So my mistake, there's a lot of waves to the downside here. So in actual fact, all I was doing was making money out of a pullback before this is ready to roll over. But hey, a profit's a profit. Let me show you a couple of other examples. So this is a trade in the Dow on the 14th. I've got some more recent trades as well. So you can see there's a long trip down here, but this 30,000, we had some higher closes here, and we had broken out with a big bar down here, a couple of reversal signals down here. So I was trading a reversal here. So I took 1,000 out of this as we went back into that resistance area. There's my entry point. And there was my exit point up here. I took just over 1,000 out of that. This is a day trade, by the way. NASDAQ trade, another 1,000. Now you don't have to use a lot of leverage, and this is £12 a point. You can see again, it was wavering down, but you had some significant moves off of here. So by the time I bought this, that's my entry point there. That's the live account showing you my entry. We come off the 250, closed higher, had a deep pullback there. So I sold this into this resistance area soon after I took this screenshot. So, you know, it got my day's money. So I'll just take that and grab it and walk away. But in the trading room, I can just show you how to get these trades. There's 540 on that one. I think that's a copy of one that's setting up. It's an oil trade. Similar story. We had a wave pattern to the upside. Huge move to the upside. It bounced off all this support. Closed higher up here. As there's 500 odd pounds up there, as I'm just potentially trading that back into that resistance. Okay, so you got a 1, 2, 3. So I bought that on confirmation of wave 3. Okay, 1, 2, 3, and this is an age-old chart pattern and a way. This is a good way of trading because wave 3 is the dominant wave. It's generally, well, assuming it's a good, reliable volume market that you're trading, wave 3 is generally the biggest wave. So that's the impulse. So all this, you know, this selling, this weakness, and suddenly you get this huge uptick in the price. So impulse, pullback, direction. Impulse, pullback, direction, and that's what you got on the Dow today. But I got stopped. I got taken. Well, okay, some profits back because we got a deeper pullback than I was anticipating. But markets, yeah, as you know only too well, markets don't go straight up and straight down. They're constantly wiggling. But these kinds of patterns are typically the way in which the market reacts. And so if you mark these, know how to look for these, mark these up, you can get these kinds of moves. Okay, I'll just show you a couple more examples. This is my oil short. Markets come down 3 times faster than they go up, so shorting is good. At 130 pips on this. It actually came down into 95. Yeah, it did come down to 90. No, it didn't do that yesterday. It did 95 today. I think I dropped. There's the entry. There's my stop. 129 pips as I did the screenshot. So as this came back down into 97, yeah, this did 97. This is a couple of days ago. It did 95 today, didn't it? Came down and then it went back up, and then I sold it into 99 today, and then it went down to 95. So I got 2 legs out of this. Leg number 1 yesterday, and leg number there's wave 2, the pullback, and this is wave 3 today into 95. And then we're back up to 97, 98 at the moment, but we're struggling. Okay, so yeah, it's good to so we're using a system. What's it? S&P trade on the 13th, 730 quid on that one. That's back to the gold. Okay, so that is a quick roundup of the. There's the gold on the. My cat's just jumped on my keyboard. Hang on. That's a good example of what you can do on these markets day trading. So I'm not in and out looking for a few pips here and a few pips there. I am trading this market for a good 50, 100 pips plus on any one market in any one day. Oil and Dow, my favorite. Gold has been very difficult to trade. I gave some profits back on oil because I was holding into last night. So, and of course we had a very late drop and a deep move into 1680. So I gave some profits back on that. Otherwise, it's been a great week. Very bullish this week. In fact, it's been a good 3 or 4 weeks. Oil and Dow, Nasdaq, etc., have all been very buoyant. You can, if you want to trade the before breakfast. This is the DAX. The FTSE's a bit of a slug, a bit too slow. If you look at this is a 10-minute chart. So let's have a look at this morning. Yeah, so the end of the Asian market and the open of Europe was here. This is very tradable. Right, so that's the end of Asia and the European Open. I'll come on to that question in a minute. So you basically got, you came out of the open range, back into pretty much the middle, the center, the midline of this range. So you got direction, pullback, move, and that was all over within about, in fact, a lot of that was over and done within about an hour. So this move into this pullback was actually into the London Open. This is the London Open here. So you didn't have to, if you just open your charts up at 8 o'clock in the morning, you got an entry in about the first 10 minutes. And then about 40, 50 minutes later, you've got to push back into that support. And even at the ECB announcement, it just pushes up into resistance and then goes back. So you've got a 1, 2, 3, 4, 5 wave. Or if you want to count, it's easy just to count into 3 really. 1, 2, 3, 1, 2, 3. So 3-wave corrective move into resistance, and then you get another 1, 2, 3 out of that as a result. Yeah, I trade all year round. I do adjust my settings for the August period. In actual fact, sometimes August, I tend to just put smaller targets in August rather than stop trading. I do take fewer trades, but there's still plenty of opportunities in August. I'm not scalping anyways. I'm not jumping in and out, taking 2, 3, 4, 5, whatever trades a day. I'm looking for intraday moves rather than the scalping. So yeah, there's still plenty of opportunities in the July-August period. What tends to happen is you tend to get oil just drifting lower in the summer months because all the main contracts for oil are in place for the drive season, the US drive season. And then you tend to get more volatility in the indices as they flip around on lower volumes. But if the summer months tend to drop and dip, shorting the markets is quite often more profitable than buying anyway. So if you catch the right levels on these indices for the drops, the dips, sometimes you end up spending less time and making more money because of the distance that you tend to get on the drops being more profitable than some of these grind higher days. So if you would like to join me in my trading room, I think the best thing to do is to just go on to Trade Easyway and drop me a line. Otherwise, you can message me or give me a call on this number. Everything's on the website as you'd expect. But basically, if you want to come in the trading room, Mazina, have you been in on my program? Not yet. Right. Okay. Okay. Well, if you want to come on the program, I'll give you more information about that. We run 2 programs a month, and then the fee gets you into the trading room for 4 weeks, and then it's a modest charge to carry on in the trading room. All right, so I'm on WhatsApp, or you can just text me, ring me if you want more information. Otherwise, watch out for future events. I am okay. Well, yeah, like if you're trading in the morning, then you need this. Then I would trade the DAX. Look at all that resistance. All the DAX did in the end of the Asian period is trade underneath that level here. So a nice move. Yeah, look at that. That was all over and done with by about 9 o'clock. You could have closed your account by 9 o'clock on that one. Taking a trade at, what was this? This was, yeah, in the first opening period of London, it pushed up into resistance into London, and then was over and done with soon after 9 o'clock. All right. Well, thanks for joining me. Have a good evening, and look out for future events. As I normally do these every Tuesday, because Tuesday was so hot, I postponed this one for Thursday this week, but we'll go back to the Tuesday sessions from next week. Brilliant. Have a good evening. Thanks for, or good afternoon, depending on where you are, and thanks for joining.